So hello there, welcome to Elisha FX once more. This is Kelvin Elisha Ziwa. It's been a while, about 2 weeks, 3 weeks, I think. Yeah. So I basically just gave myself some break, some summer break. I had to give myself some rest, of course. And yeah, we're back. And so to kickstart with our week, I'm gonna give you some market analysis in gold USD that I actually took this morning during the London session. And then yeah, so we'll have some market breakdown in gold, and then I'll also break down like an opportunity that I missed actually yesterday in the same gold, but just after that I actually saw another opportunity that came to play today, so I took it. That is in my funded account. I'm currently running a funded account that I hope to pass and then yeah, get funded. And so without further ado, so like I said, today we have gold USD and this is the 4-hour time frame. And as usual, we'll start with analyzing the direction of the market, of course. So in the higher time frames like the weekly, the daily, I had already analyzed that it will be an uptrend. It is an uptrend rather, and it was just doing some retracement, I would say. And so yeah, so we'll do the same in the 4-hour. I will have these are the supply zones that I actually noted down in the daily time frame. And then so the daily, weekly time frame, you would want to make sure that you have your areas of interest and your support levels or resistance levels. That is very important to have them in a higher time frame. And then yeah, so the market direction in the 4-hour time frame, as you can see, it was going down all the way up to there, and then the market finally broke the previous high there, as you can see. So the market broke the previous high, and so if you extract this is how the market looks like. It was a downtrend until this part where it broke the previous high, as you can see. And so it means that there is a change in what? There is a change in direction of the market. It was retracing in a daily and weekly time frame, and then in a 4-hour time frame, it has now changed direction to being an uptrend. So as you can see, we will note down where there was a change of character. So this part here that I'm noting down, this is where we have the change of character. Let me just write that down. Change of character. It means that the market was in a downfall, then it has changed into making higher highs and lower highs. Yeah, so as you can see, these are the break of structures previously before the market changed the structure. So these are the break of structures. Here we had one, here we had one, another one here, and we had the third one here. So yeah, that's the first thing you do. You have to analyze like the direction of the market, where the market is headed to in the higher time frames, as like I said. And so as you can see here, once the market finally broke this previous high, I'm using the bodies, by the way. By breaking, I don't mean this long wick, I mean just the bodies. It broke, it had a body closure above the previous high, as you can see here. And so as you can see over this part here, this was a spike that prompted the break. So I can say this is our demand zone, so DMD, zone. So that's our demand zone, meaning the market is more likely to come back, retest this zone before it can actually continue heading to the upwards. And so as a trader, you would want, as you can see here, this actually is a candle that shows that there would be a spike downwards, or retracement rather, towards the demand zone, and then continue into the uptrend. So yeah, these are the liquidities that we are aiming to break. So this is a buy side liquidity. It means that this is the level at which, the highest level in short, that the market reached before it started retracing. So as you can see here, this was the level that we had, the buy side liquidity, and so we're expecting the market to move from there, hit the demand zone, and go all the way to the buy side liquidity. And so that's our movement, and that's the trade that I had actually anticipated on this one. And so when we had so those who are using trend lines are also something that works actually. As you can see on this retracement, this was a trend line. It was on a downside, it was going down, high, down, low, high, low, and as you can see at this point here, it broke and then came to retest before it made this spike there, as you can see. So we had a break in this trend line, this part here, that's a trend line, and we had a retest. And so people would have entered at this retest here, that those who use the trend lines, of course, but I would rather wait for a retracement into this zone here, the demand zone, because I basically trade with the supply and demand zone. So if I would put my position is exactly at this, just above this demand zone here, as you can see, and then my stop loss would be below this demand zone down there, and my take profit, of course, it will be at that buy side liquidity. And so this is a 1 to 2.44. That's a very huge RRR ratio. As you can see, after playing the market, it went directly into our direction. Immediately it touched this zone here, as you can see, it went all the way up there until it touched the buy side liquidity. As simple as that. So this is the trade that I actually missed. So I missed this trade. I had actually analyzed, but it happened like way earlier in the morning, around 9. That was before no, it was actually the time when London session had just opened, and I wasn't on the charts by then, so I missed this first trade. And but yeah, luckily I caught the next trade, because as you can see here, there are still the 2 supply zones there that haven't yet been retested, and so I knew that the market would actually retrace to some level before it can continue all the way to these 2 supply zones that we have on top there. So yeah, I was waiting for an opportunity to enter a trade. Let me just, so this was the retracement that I had actually waited for. As you can see, we had a double top on top there, and then at the retracement level, that was the second trade now I was looking at. Since I'd missed the first trade, I was looking for an opportunity to enter into the second. And so as you can see, I had the double top over there to show that it was actually starting to retrace. And then yeah, so D top, that's the double top that signified that the market is going to be retracing. And so at this point here, we had a low movement, as you can see, a downward movement, a bearish movement as it was retracing, and then the market clearly reached this point here. Let me just move this thing here. Okay, right here. Okay, let me just zoom in. So this is a 15 minutes time frame, I scaled into a lower time frame, which is the 15 minutes time frame, and as you can see, there was a clear head and shoulder pattern. Look at that. There was a lower high, lower high, lower low, and then at this point here, my bad. Yeah, so at this point here, as you can see, the low failed to break actually the previous low, and then I was anticipating the market to have two movements here. Let me just show you. I had two lines here, so I had this high here. I knew that if the market can break this high over here, just a minute, this was the initial movement, as I said, and I was anticipating it to make the head and shoulders. As you can see here, this is the head and shoulders, and then all the way up to breaking that DT, the double top that we have noted down there. But after breaking the double top, we know that there are still supply zones on top there, so yeah, we would actually leave the trade running all the way until it hits one of the supply zones. So these are the two levels that I actually labeled that the market must have to break on the upper side for me to enter a trade. And then on the lower side, in case it was going to break on the lower side, I was hoping for it to actually go all the way and retest the neckline of this. As you can see here, there was a neckline here that was broken, so I was hoping if the market breaks this lower support, the support here, it would have gone all the way to retest that break. But in a case where the market breaks on top here, which is what I was hoping for, of course, is that I will enter at the break exactly. And then yeah, so after playing the market, as you can see, exactly at this point there was a break in the market, in the previous high, and the break of this line here that I noted, and so I entered a trade immediately after that break, as you can see. So this is how I entered my trade at this point exactly, and my stop loss was just below this line that I had noted there. The profit, I had initially put it at the double top here, but I knew that the market would go the way and retest at least the first supply zone that we had in the market, and that was the supply zone that we had. Initially, I knew that it would actually respect the second supply zone as well. As you can see, when we played the market, it went exactly like there was no retracement, not until it took us, like we took the profit, and this is the trade that I actually took in my funded account, of course. So it went exactly to our take profit, but it continued, like I said, all the way until the top there. As you can see, that was such a movement, such a good movement. And yeah, as you can see, that was a simple trade. Those are the two trades that I actually, one I missed, and then the second one is what I took actually to compensate for the missed trade after I saw the opportunity. So yeah, that was all for today. Thank you for your attention. This is Elisha FX. Stay tuned for more content like this, and of course subscribe, like, and share the video if you benefited something from this. Peace.